Has sentiment in the gold market finally recovered? Joining me today is Peter Hugg, Global Trading Director for Kitco Metals. Pete, good to see you again.
Yeah, it's nice to be here again, Daniela.
So last time we spoke, about a month ago, you mentioned that markets were still extremely short on gold. Have traders' positions reversed course here, Pete?
Well, I wouldn't say the entire book is reverse course. I think there's still people out there that are negative the gold market. But as you recall, when we spoke last, trying to remember when that was, it was probably 2-3 weeks ago. Gold was trading in the sort of the 1180-ish range. We suggested at that time that gold holding 1180 was a positive momentum indicator, and we were actually bullish gold. Indicated buying gold after the Fed meeting in September would have been a consistent move based on what gold has done since the Fed has raised interest rates at all of their Fed meetings. Gold has basically initially dropped and then rebounded. We had the same event occur this September. So we think the 2018 lows are definitely in. I don't think you're going to see 1180 this year. Nor do we think we'll see silver south of 1420 by the end of the year. So we've been constructive the gold market. As you know, Danny, when I give my comments, it tends to be towards traders, not necessarily long-term investors. And we've been trading the support resistance lines, and it's turned out extremely well. And buying gold at 1180 support the other day, we suggested if gold last week, if gold broke up through 1207, we would then be testing the 1228 level, which we did. And the other day we suggested 1237 would be a target, which we hit yesterday. It's backed off a little from it, but we remain constructive the market.
We're going to stop you right there on those levels, Pete. I just want to look at some of the catalysts behind gold's rally here a little bit deeper. How much do you think was due to the correction that we're seeing in U.S. equities here?
Well, I think the correction in equities wasn't, a direct result of gold. Gold's rise was not a direct result of the equity drop. I think it was more a psychological motivation for the traders in the market. With the equities under pressure, and there are other factors that we can get into on your next question, if you have another, is that the equity drop is going to create a pause in the Fed psychology. Mm-hmm. So we're still of the mind that it's conceivable. Again, it'll depend a lot again on the midterm elections. Nobody's paying attention to the midterm elections. If Democrats get 4 or 5 seats, you're going to have a lame duck presidency for the next 2 years, which means nothing gets done in Washington. So everybody's discounting that, and there's a real chance here that Democrats may pick up enough seats to create a situation where the Republicans have no majority for the next 2 years. So that's going to impact politics, and,
right.
And that could be substantial. But from a Fed's perspective, if you've got a stock market that is in trouble, and the stock market still looks overvalued at these levels, they may start to take their foot off the gas. Now, if that happens, now you have a situation where maybe the dollar's strength over the past year and a half is going to start to mitigate. That's very positive for the metals. So I think that's what the traders are looking at. The Fed now reconsidering their aggressive hawkish stance for 2019, which at best should mitigate strength in the dollar, which then becomes a positive for gold. Then you add on to it the issues that we're seeing in the EU with Italy's budget deficit. You still have serious issues with the China tariff issues, and you potentially still have issues coming with North Korea and Iran. And now you have the Saudi Arabia issue that's just surfaced over the past week. There are just so many macro factors out there that, you really gotta.
Yeah, and inflation, right, Pete? Is it moving up higher?
If you look at basically the 90% of the goods that are sold in the United States, at least from a retail perspective, are made in China. You had another 25% tariff on that starting in January. You're going to import inflation into the U.S. economy. So, there's a number of macro factors here that would suggest to me, I wouldn't sleep well being short the market. As a long-term investor, I definitely want to hold a gold position. As a trader, we've been trading the technical levels, and that's been very successful. You know, we've been selling at resistance, buying at support, and that's worked out very well over the past 3 or 4 months.
Peter Hug, thank you so much for joining us.
You're welcome.
And thank you for watching. We'll be back tomorrow.